Hi, everybody. This is Johannes Maria here. I'm the CEO of the Destinata Equity Fund, and I want to inform you today of a great opportunity that we now have available to our club. What makes it really exciting is the fact that we've just registered a prospectus for this offering, which means that it is available to the public. Okay, first the background. So it's not where I'm sitting today, but it is one of our existing units in Destinata Capital, which we own, just to show you what our typical unit does look like. Through my efforts at Destinata Capital, which is a Section 12J private equity fund, we have found a wonderful asset class, which is short-letting property in specific areas in Cape Town, and the specific area that we focus on is the Waterkant area. Now, there's quite a few reasons why this asset class works really, really well, whilst still fitting in with all the fundamentals that are advocated by the Destinata Group and by the Wealth Masters Club. Okay, so first up, I want to illustrate the difference between an okay property and a great property. I'm going to show it to you in Excel. Okay, so I'm going to share my screen with you. All right. Let's look at a typical property that's been purchased, excuse me, at market value, and it does all right. Okay, so the example I've picked here, typical property, 2-bed, 2-bath townhouse. Say it does came at a cost of 800,000, gross rental of 7,000. Is your management fee to the agent, levies and rates, which means your net after that gives you 4.4, so after all costs, and the yield percentage that gives you is the net times 12 divided by the cost. That gives you 7%, which is not bad. And depending on the area that you purchased in, your capital growth is also going to be quite interesting. So we're finding that, excuse me, in Gauteng, the growth seems to be lower than in the Western Cape, for example, with the Western Cape being the most popular province in the country at the moment, and there's very good reasons for that. Okay, so to show you what a typical Airbnb unit that we own in Destinata Capital does, for example, let's work on a 2.5 million rand property, gross rental. Now, I always look at an Airbnb property over the course of a year rather than month by month, because we do have season and off season. Obviously, the units do a lot better during season, which is the summer months, because we do hit the foreign market then. We come here with strong currencies, and obviously Cape Town is very popular. Right, so on average, that is what I would gross. Now, the running costs of an Airbnb unit is obviously significantly more than that of a normal townhouse, for example. So we've got a 15% management fee, but that company sorts out everything. Okay, so if we then work on management fee, levies and rates, that's about the yield we get, or the net. And to work out the yield, times 12 divided by the price, 11%. And now to go a step further, let's say this property is situated in Gauteng. Let's be reasonable. Let's say we've got about a 4% capital growth there per year. But if we look at Cape Town, we're probably going to get 9-10% per year. Let's work on 9%. Be a bit prudent. Okay. So what difference is this going to make when we gear a property? Let's put in the okay ones numbers first. 7% yield, 4% capital growth. So ungeared, that gives me an 11% return on cash with the 7% yield and 4% capital growth. If I gear it 50%, now I start getting a finance cost component. But my cash in the deal is less, but I still only get 11% because now I get 6/50, probably rounded down there to 11%. And the same occurs when I gear it up to 80%. Let's make it slightly better. Let's say we get 5% capital growth. Now you start seeing a little bit of difference in the geared versus ungeared, but still not spectacular numbers. Now let's look at a property that performs really well. And the key concept is here, the better the property does, the more that is exponential when you go and gear it. So for example, let's take this property, 11% yield, 9% capital growth. Look at that. So ungeared, we're looking at the 20% versus the 11 we had earlier. But look at what we get once we start going into higher gearing numbers. Because there's less cash in the deal, the capital growth and the yields are just exponential versus the own cash in the deal when you do it this way. So that's what makes an exciting property and a really great property so good versus an okay property. Okay, but let me take you through a bit more detail. Also to mention, Destinata Equity Fund, which is this opportunity, is a registered FSP, and there is our FSP number 50349. As I mentioned, the prospectus is now open. And there's an extract from our registration certificate from the CIPC. Okay, so I'm going to go into a bit of more detail around why Cape Town property works so well. And it's due to the fundamentals being so strong. Supply and demand, if I go back to Economics 101, what have you got on the supply side? Cape Town, physically, geographically, is very small, which means there will always be limited supply, purely because there's not enough space to build too much property. You've got the mountain on the one side, you've got the ocean on the other side. Okay, then onto the demand side. Cape Town has been voted on a regular basis by various travel publications as the #1 city in the world to visit. And even in magazines where it's not necessarily voted as the #1, it always features in the top cities to visit, but quite often at #1, consistently across various publications. So it's popular to visit. That's why short letting works quite well, as opposed to, for example, long-term letting, because our market is guests that come for short stays. Okay, so that's critical. And secondly, our guests come from the Northern Hemisphere and they want to come here in the summer when it's cold up there and warm down here. And they've got significantly stronger currency than what the Rand is. So their spending power is very strong. So that popularity plus the spending power leads to quite a niche market. And through our efforts at Destinata Capital, I've been able to build a wonderful network which gives me access to great information. I've got access to good deals, and the other important thing is I've got access to great management, and that is also critical. Okay, but back to the basics. Supply and demand works for Cape Town, and I've just explained the reasons. Okay, what is the secret sauce for us that really helps Destinata Capital's units perform well? And the reason why I speak a lot of Destinata Capital is because we will be copying and pasting that business model. into Destinata Equity Fund, because we've already got the network and the know-how and the contacts in place. Magnetic PMB. It is, in my opinion, the top short-let management company in Cape Town. They are a super host on all of their listings, and they've been around for more than 5 years. To my best knowledge, it is the only short-let management company in Cape Town that has managed to keep its super host status over the course of 5 years or more with the number of units that they manage. Also, what it gives me access to is good deals. Because Magnetics people are on the ground doing the work, dealing with guests, dealing with new developments, etc., where opportunities arise, I always get access to really good information because I find out of good deals from them, but also our units get preferential treatment when guests need to be placed. So that was a critical investment for us. Just to further explain, we invested in them initially at Destinata Capital when they were managing 13 units. They have since grown over the last couple of years to managing over 100 units. And this was a great investment for capital. Okay, so we are offering Class 2 and 3 shares. The Class 2 shares are investors that put their money in upfront. Our minimum investment is 100,000 Rand. So if you take Class 2 shares, you'll be putting in 100,000 Rand upfront during this prospectus window. Class 3 shares are for investors who want to pay off their investment. Now, the minimum investment is still 100,000 Rand, but you will be allowed to pay it off over the course of 20 months. And the reason why I split those two share classes is because for the Class 2 shareholders, the cash is obviously coming in upfront, and we've got more cash to work with to start acquiring properties versus the Class 3 investors whose cash will come in over a period. So our deployment will be later than for the Class 2 investors. Then also very important, if you invest R1 million or more, you are seen by the Companies Act of South Africa as a qualified investor or sophisticated investor. And that means the prospectus is not necessary for you, and you can invest basically on a private placement. And for our private placement investors, those investing R1 million or more, there will be a discount of 20% on offer. So the Class 2 and 3 shares are on offer at 10,000 Rand a share. If you invest via the private placement, you get them at 8,000 Rand a share. Okay, the numbers. So here's what the Destinata Capital units did from January to December 2023. Worked out at an average yield of 10% on these units. But also important to point out here is 16 Umbria is the building that we've invested in the most lately. We found that is our favorite building in Cape Town. Docklands also does very well, but over the last 12 months, that has been our yield, and that is net, not gross, on our 16 Umbria units. Now, obviously, given we have acquired most of them at bargain prices due to our network, so those type of deals aren't always available, but it just shows you the power of the network as well when we do get access to really good deals. Okay, so back to the calculations and also what I showed you earlier. If we work on a 9% yield, which I think is a very fair assumption, 9% capital growth, which is very achievable in Cape Town, and I'm going to work with an 11% finance cost because we are in a stage now where interest rates are expected to come down from prime where it is currently. Ungeared 18%. Once we start gearing, obviously that return on cash starts going up, we start seeing a finance cost component coming in, but we have less cash in the deal. And at 80%, shows you a great return on cash. Again, because the units are special and they do really well. They do better than your average okay property. Now, there is obviously going to be a cost component as well. We've provided for 2% management fee, as well as 2% for admin costs. And then the Wealth Masters Club will take a marketing fee for making this opportunity available. Okay. And then obviously corporate taxes, etc., also kick in. But as you can see, there still a really good post taxes and fees return on our highest gearing there. And 80% will be our target gearing ratio. Okay. So why not just do that investment myself? Why go through a fund? Now, I would absolutely advocate doing this yourself as well if you have the means, and especially if you have the network. It's a great investment. I'm personally invested in this sector as well. But there are a number of really good benefits by doing it in a fund as opposed to doing it yourself. Number one, you don't have to qualify for finance. You don't have to do the applications, and you don't have to bear the risk of personal surety when getting bonds to finance these deals. We do that within the fund. Okay, that's quite a big one. Secondly, you don't have to manage the property. We've already got access to the correct managers, and they can manage it for us. You don't have to deal with tenants or guests. And then the other point, which is quite important, is the network and the access to really good deals and the expertise to know which properties work and which properties don't work. I've already built up that network. I've built up that knowledge of the market. So it could be extremely beneficial for an investor to tap into that existing knowledge and network by going through the fund. So essentially that makes you an armchair investor. You provide the capital, we apply and deploy it correctly through our network and know-how. Okay, so if you want to invest, what do you do now? We are making a page available on our website where you will have the different options. So class 2 through the prospectus, class 3 through the prospectus, and then also the private placement for the R1 million plus investors, as I mentioned earlier. You will complete the online forms. It's all automated. You also need to supply us then with the relevant FICA documents. It is indicated on the application forms what you need to provide to us, and it's critical that you do because it's important for our compliance. And you will then receive a share certificate after you've deposited your investment amount. Okay, so these are application categories, so we'll call it that. So just to show you an example, for example, if I did class 2 application, those links will also be on the website. You can go and click on it. I'm just going to use my Gmail here. It'll take you to the document and write. And it'll guide you through the steps. Just to show this as an example, all the fields with a star attached is required. Number of shares, let's say 10. So that'll be 10 times 10,000 Rand, which is 100,000. Okay, this is not an illegal entity, so I can skip those. I must just say not applicable. My address. The deposit number, you see the reference should read def and your name. Okay. Account name. So you will enter your bank details here so that you know where to pay dividends and should you exit the investment. Okay, I'll ask you to initial. You can also upload or you can draw it if you would so choose. Source of funds, where do you get the money from that you're making the investment with? Let's say savings, for example. Initial. It'll auto-populate the dates, and then you can sign. Initial, and submit. Okay, so it'll then send an OTP to your email address that you've entered. You can just enter that OTP and the document will then automatically forward to one of our directors who will co-sign the application if you are successful. And from there, we will guide you with how to do your deposit, which FICA documents to send to us, and so on. Okay. Right. So a couple of frequently asked questions. What are you investing in? You become a shareholder in Destinata Equity Fund when you invest. So you will receive shares. That is essentially what you are purchasing. And that gives you all the rights of a shareholder. So essentially you become a co-owner. Okay. So the minimum investment that I'm mentioning here, that is for the private placement investors, R1 million or more. For the prospectus investments, the investors, the minimum investment is 100,000 rand. Okay. And then can you exit? Yes. There's three options. Either a buyback by the company. It will be subject to solvency and liquidity in the company. You can also sell to a willing buyer. And then thirdly, we do plan to list the fund in the future on a stock exchange. Our current preference is actually the Cape Town Stock Exchange and not the JSE. And that would obviously then also create the liquidity for shareholders. Okay, further notes. Please note that the numbers are based on assumptions and returns cannot be guaranteed. Any business is influenced by various outside economic factors. And then secondly, this presentation should not be seen as financial advice. All right. And I thank you for your time. And I trust you will look upon this investment opportunity favorably. If you have further questions, you can also request a Calendly meeting with myself and we can talk through it. And yeah, hope to hear from you soon. Have a great day. Cheers.